Okay, good morning, guys. This is Simon with Trade and Perform Coaching. It is Tuesday morning, the 25th. If you would like to ask for a 5-day pass to the room or have any questions about membership or any of the process in the room, tradeandperform@gmail.com. So let's go. So I dragged myself from negative to positive this morning. I did so right here. I took this long on this bar, and that popped me from negative to positive. So I was down 300 or something, 200 and something. And then I popped up to, I don't know where I'm at, actually. I will tell you right now. $278.76, which puts the accounts at new highs on both of those. So that's good. Where do I want to start? Well, let's just go with the basics, right? First of all, if you look at the profile, let's look at the clean profiles. ES. So this is 24-hour chart, right? So this is ES. So this is so if you want to count back, this is overnight, day session, overnight, day session, right? So that's how it goes. So if you look off to the left, first thing you can see is quite clearly, let's erase all our lines, that both in the overnight and the day session, the market had a hard time getting through this area right here, right? You see we closed up into it. And then you can see on the day so this is overnight, day, overnight. You see the overnight closed right. See how we broke out on the overnight? Closed right on top of it. They tried to push back in, failed, closed up at the high. So sometimes you don't need specific levels, right? The first thing you need to say is you can kind of look at the chart and go, well, look, if we get below and hold below 37.58, we're trapped back in the range. And the most immediate bottom of that range is down from 37.01 to 36.77, right? Which means just everything between 37.58 and 37.01 trades through pretty easily, right? So then the next thing you can conclude from that, if you looked at the readers, you'd say, well, bulls want to hold. Obviously, the most obvious answer is above prior day's low would be one answer. That'd be one place we would look. Right, so you go, okay, I need a way to kind of judge who's in control. So that's below prior day's low. So then you gotta have to go through rules of prior day's low. What do we know about trading below a prior day's low is that we usually trap right underneath there. Now, the question will be, what will the PA look like when we get here? And if it doesn't trap back in, obviously the answer is we roll down towards this 37.01 to 36.77 as a ballpark downside destination, right? So additionally, if we really want to stay bullish, we'll never get below this, right? It'll just hold that 37.79, which overnight. So now if you look at those areas, right, and now you look at the overnight and how the market's traded, and what you conclude from that, right, is that we've gotten nowhere near that 37.8, basically 37.80. We've gotten nowhere near it overnight. So even though the market's down a little bit off the open, you'd still say buyers are in overall control, and ES did what it normally does, which means in Asia, we chopped, we came back to the point of control, we attempted to get back to the prior day's high, failed, back to the point of control, and then this has been chop, 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 chop. And then that value area low, right, is right at that 37.80, 37.79 area where we want to hold if we're buyers. So even a trip down here, you would still argue that buyers are relatively in control. In addition, if you look from yesterday's swing low, right, you would do this. Maybe I'm off on that prior day's low by a hair or two, but I'm close to the high. And you would see that 37.79 is the 62 retrace. So now we have confluence at one area. We have value area low, a 62 retrace. We know buyers tend to buy at that 62 retrace, right? And we know all of that has to be broken before we get bearish to the downside. So I'm circling 37.79 down to 37.70. as, hey, I hope I get a good setup in that area. And that setup holds the promise or the potential to at least come back to that 38.22 to get tested, right? Now, if it fails, right, now that brings up prior day's low, which apparently I'm off on by a tick or two, so you may want to adjust that. It's hard to tell sometimes off the profile, but that looks more right. 37.52 looks more correct, right? So now you have a picture in your mind of what it looks like. None above 38.22, right? So one thing we'll notice is that while, yes, it could get exhausted up here, like how far back, like what's to the left to help us out determine, right? Not on that chart, this chart. Okay, so an interesting pattern is starting to come in here, right? So first of all, we could argue there's a potential double top going back to the 5th of this month. So now I'd want to mark off 38.22, 38.23. That was yesterday's high. We know if we get above that, two things can happen. First of all, you know there has to be stops behind there, right? So we would look for potential exhaustion above and then potential trap back in. But we'd also go, if it doesn't exhaust above, what would that look like as a breakout? So now we need to come back a little bit further. And I think the answer will be is I don't have enough days loaded in. Let's see what's above that 38.08. Not enough days loaded. So we'll go and load more days on this and give it a little bit to load. Data limiting. We'll give that some time to load, right? Because I don't have to go over the actual setup. We know what the setup is, correct? I will cover it, but we don't have to. So then let's go look at the same idea on NQ profile, right? So, and let's in a little bit. Okay, so the first thing I see on this profile when I bring this in like this is number one, this is kind of bullish, right? Higher highs, higher lows. It doesn't mean I don't have a read on the greater market, but we're making higher highs and higher lows for the first time where we had a higher swing. We've had a higher swing low, right? So in NQ, in order for me to be uber bearish, right, I'm going to have to get below this point, right, roughly here, because that's my last swing low. If this thing, oh, I'm sure it's tied up because of the because of all the data I'm downloading. But that's approximately where I have to be. Below 10.9, let's just call it 10.900, 10.930. Okay, that's the higher low. And I'm making higher highs on my swings. My stops, right, if I'm looking for a target, have to be behind 11.736.75. It's obvious, right? We don't have to, there's not any rocket science that we have to do there. It's just, hey, that's where it is, right? That 11.750 area. That's where all the stops are sitting. We've already taken the stops here. Could we fall back in? Sure. Am I proclaiming that the low is in and that we're rallying? No. All I'm saying is that's where the level is, right? That's all I'm saying is that the stops have to be sitting right there. In order to break out, that was our last swing. So now we have two pictures. I don't know why this is doing. I'm sure it's because of all the data I'm downloading, but we'll fix it. So all I know is this 9:30, this early October high, right, has to go in order to break out. But we have some constructive PA, and this explains why longs have been easier than shorts over the last 2 weeks, right? We've had range, but higher highs, higher lows. That's something you look for. There's a potential, if not sloppy, head and shoulder. See how we held the left and we held the right, that 10.929, left and right. So that's kind of bullish. That's an inverted head and shoulders. That's bullish. And you'd have to say we've actually broken that neckline, right? If you put a trend line through there, we've broken that neckline. And so now there's a potential of a visit at least to 11.753. So now, why is that important to us is the question, right? So anyone can see that. I didn't do anything special, right? Well, the first thing it does is it helps us understand why we're not giving back the rally like we were in previous weeks, right? Like over here, all these rallies get given back. You can pretty much short at will anywhere in here, and it's rolling down. Well, all of a sudden, that's kind of changed, and we're starting to get pushes up. Now, what I learned over a long period of time, right, is the more sensitive you are to that slight change, right, over to the left, rally's failing. Over to the right, just in the last couple of days, sell-offs failing, right? It's a really slight change, but it changes your whole perspective on what to expect. Like, for example, the shorts are stopping more all of a sudden without going to target, right? Really small example, but unless you're day trading, right? If all of a sudden you take 5 day trades and 3 stop and 2 win, you're like, whoa, wait a minute. Not only that, but the size of the extension on the short is really getting pretty greedy from what the market's willing to offer us, right? Whereas before we could go 50, 100, even 200 points. Now we're like, hey, I'm begging for 10 points sometimes. 20 points sometimes, 30 points sometimes. That's a big change in perspective, right? And so we have a couple clues, and the clue's important because if you look all the way back into August, you'll see this is the first time that you can point to on this chart where we have a higher high on the last swing, right? So it does not mean the market's turned. It does not mean go long anywhere you want to and get paid. It does mean there's been a slight change in character in the market, and that we really want to focus on the long side until we recognize how that's turned. And let me show you why that's important. If we go back to the left a little bit, which I don't know if this chart will, because I don't think I have enough days loaded. So I'll have to go back further. But what you would have seen is a change in the character of these higher highs and higher lows on the way up. There it is. So see over here, this is the first time we make a lower high, a lower low. Excuse me. Whoa, went way too far back. But you will see it here in a second. Let me see if I can drag it back without. I don't know why this thing bogs the computer down so badly, but it does. We'll worry about it later. But this is where you start to see a lower high right here, and it really changed a lower low. This was the first time you saw that lower low back in August, and you can see how it really changed the character of the market from a day time frame, and we haven't been able to make a higher low until this month. So that's somewhat bullish. Again, you can't see that until you look back in the rearview mirror, but it does explain the last couple of days why the shorts have gotten really tough. Wow, this is totally, but there you go. There you see it. There's this series of higher lows all the way through there, and there's your lower high for the lower low on the swing. Then you see those swings persisted, and we weren't able to get a higher high for quite a long time, right? As a matter of fact, all the way through to now, frankly, it's been in this pattern of rolling to the downside. So the computer obviously does not like jamming as much as I'm trying to jam through. That's why. So with all that being said, right? So that's strategic, right? That's why I said this morning, look at the difference. Like when you look at NQ and ES, here's ES. Let me adjust this. Okay, ES has come back to its point of control, but hasn't made it back to its 50-60. Here's NQ. NQ, while still not above prior day's high, well, it looks like it's about to be, never even makes it back to its point of control overnight. So those pieces start to go, that can change your bias as to how far you're willing to push that trade, right? How far you're willing to push that trade, and how much that trade might be worth, and the inverse on the short side, right? So I can pick on Daniel because I know he can handle it. So when you're trying to try to get those shorts to work for you, right? Now you know why all of a sudden really you haven't done that much wrong. You took them on process, but the character of the bigger picture underlying has changed. And so now you're having to zoom in much quicker to take your profits, right? You're seeing that they're pushing back to test in a lot more than they were before, right? As witnessed by me yesterday. And here's the more interesting thing. Even though I knew all this, I knew it yesterday, right? I think the short has a very high addictive quality to it because it goes down so fast when it's there. And you really have to discipline yourself to have the right market to make it work. But here's the interesting thing. It's very, very hard to let it go. And because once you start making money on the short side, it's so fast and it rolls so quickly in your favor that it's very hard to let go. The problem is shorts are for a season, right? Whereas I was working with Matt yesterday and we went back and looked in January, February, May, when the market was rolling down. And even in those periods, what changed was not that the longs didn't set up; it's that they didn't extend as much as they're extending now. Right? Sometimes they would extend for 100 or 200 points, but sometimes they'd only go 20, 30 points. Right? But you were profitable in the scaling system. You'd get frustrated if you were trying to push during that period, and we knew that the market was pretty much trend day down in that period of time. Right? But here's the problem: if you made a lot of money in that period, your brain naturally wants to keep that process going, right? Like, who doesn't want more money? Like, there's nobody that doesn't want more money. You look at a billionaire and he wants another billion, right? Like, there's really not a level of money that makes you quote unquote happy, right? So here's the deal, but here's the difference. If you keep plying your trade to the long side, right? The longs tend to always work, asterisk next to that, right? Always tend to work in terms of process over series of trades. The longs tend to work, our longs specifically, right? But the shorts can backfire on you. And here's what I do and what others do. It took me a long time to figure it out, right? I think I'm smart enough to dance in between the lines and figure out when the short is valid and when it's not valid, right? Or that I'm good enough to flip both sides. But here's the problem: if I start taking stops on the short side, my frustration level rises, number one. And then I want to get the money back quickly, which means I'm not going to have the patience to wait for it to pull back and give me the long setup, right? Because there's a sense of when you take that stop, many people have a sense of, oh, I've done something wrong or I've done something bad or I have to fix this error, right? I have to fix this error. And I made the same mistake this morning, even knowing this until I verbalize it out loud, go through my journal and write it down. I shorted this right here this morning. This right here, right? So I was like, oh, first of all, it wasn't a trap. It missed, right? This bar right here, I'll erase all this. What in the world is taking so long on this? There's not that many days loaded on this. My computer's just hung up on that download that I have going. Just give it a second. But you'll see there's a star right here. I took it. And yeah, that's where I got down this morning, right? And then this is where I get my money back. But wouldn't it have been nicer if I just did this? I'd been up, instead of 200, I've been up $500 to $1,000 this morning, right? But I gear shifted myself, and I still think I can figure out the short, right? When it's not a clearly short market, right? And so when you look at the little tiny details of what differentiates one very profitable trader from a break-even trader, it's that inability to shut off the bad trade, right? It's that inability to shut off that bad trade. Talked to Bill yesterday. Bill's very conservative. I finally got him to attempt all longs. Right? I just said, just go through a week of taking all longs. He did. He was up $1,000 and he missed 4 trades by his own account. The win rate was of the setups on the NQ was 7 wins, 1 loss. If you took all the setups, not even making a differentiation between one trade or another, I can tell you the short win rate was closer to 52 or 53%, right? There was just multiple stops on the short side. I don't know why my computer's not wanting to. I just don't understand. F6. Let's see if I can fix this. Oh, well, this would help. How about that? There we go. Now let's erase all the lines. Okay, so now you can see what this was. So the reason I took this trade, first of all, I wanted to front run it because I was like, oh, it's pre-market, and they're right after that 6 o'clock. And I thought, oh, well, we pushed right into the 62, almost to the 62 retrace. And so I wanted to take this short. Got stopped, right? Didn't want to wait for an apex trap. It did not trap on this, right? So you can see it didn't form an apex, and then it comes up and it pushes behind one more time. So this is an interesting concept or idea if you look at it. And the reason why it's an interesting concept or idea is my idea was correct, right? But here's the first trade, and then the second trade didn't set up. So if you imagine the sequence here, if I would have gotten frustrated, I take this, and this doesn't set up the way we need it to, right? There's no pink bar star. It doesn't trap back into an apex the second time. So to look at all the probabilities to go, like, well, I already took this trade. I already knew it was a B grade trade. Well, this is also a B grade trade. And now I take the stop here, and I'm frustrated here, right? Because I get my money back and some profit, right? So then it comes over here, and I go, well, I already screwed up twice. And then we're so close to the low. See that? And I'm like, oh, I want an apex. I want an apex trap. So that I got to get with Bill and find out why that's not printing a star. But I think the POC just was too high on that, is what the deal is there. So now I'm going, wow. And this is the one I took, right? I had to force myself to take this. This is what got me back to positive, right? And up on the day. And then right over here, this just took place at the wrong time of day. That's where I wrote, I would take this bar anytime during RTH. It's just the time of day, right? And so what this shows is you can get off process by just a few hairs, right? And I walked in just too late to grab this trap, right? Otherwise, I'd have been long here and it would have changed my perspective, right? And the way this series started was, oh, I missed the trap, right? Oh, I missed the trap. I should have taken it long, right? So I take the short instead, get stopped. Now look at the other way that I could have done this, right? Okay, I'm going to take the long. Oh, I missed the long. I hope it sets up again. Okay, well, that should have been a star. That's close enough for cigar hand grenades for me. I'm long, right? So I'm long here. I get paid. Okay, that's a good start to the day. That would have put me up right there, $400 or $500, right, per account. Roll back down. I would have seen this and I gone, you know what? The time's not great, but I'm already up $500 from over here. I can afford to stop here. I take this trade. Bam, now I'm up. It's a really small distinction. That's what really drives people nuts about day trading. It's a really small, thin, tiny line between the guy that makes $1,000,000 and the guy that never makes any money and the guy that loses money consistently. It's such a small, thin line, right? The difference between me being up 2K for the day and me being up 200 and what am I up? 273? 275, 278 per account, 600 almost net, right? So the difference here is between being 278 and up 2K per account was one short stop, right? Incorrectly taken, or if not incorrectly taken, not waiting for a significant stretch and not waiting for an apex trap, right? So I can argue all I want about the star out of the 50-60, but we know the apex trap is better, right? And that, and while you may look at it and go, oh, that's such a small difference, Simon, like, really? But now go through my day yesterday, right? Go through and look at the same process from yesterday. So I believe right here, I'm on my back foot here, I think, right? However I'm doing it, I'm on my back foot. I took a stop here on the POC under POC, right? 2 weeks ago, that was so money, right? And I'm still willing to take that trade, but I was already on my back foot, right? Now look at the difference in the longs, right? So come over here, trap. Look at the stretch. But if I'm not on my back foot when this occurs, which I'm not sure what time, but I already know I was on my back foot here, and I had to work to get back to up on the day or positive, right? If I'm not on my back foot, I'm looking for my trades through here to the long side. Even on these little apex traps, they're all working to the upside versus, but what was I doing? I'm over here drilling on the short side of the trade and sometimes getting hit. Like I took this, so this short worked, but then I took this, and I said, oh, that's the second one, and that's a trap and pink bar star that's going to work. And I didn't cover any of it, and it stopped me out, right? So it really, because of the inconsistency of the short and how it worked and how far it would stretch, right? The other part was sometimes it's stretching a lot, but sometimes it's only stretching 1 or 2 bars, comes back and stops you, right? Versus look at all the longs. Look at the stretches on all the longs. You could afford, right? You could afford to be a little bit dumb on the longs and overpress because they were just working. And then I didn't take this trade right here, which set up perfectly on an apex trade. I forget why I didn't take it, but I did not take it. I think I was late or I was distracted, but whatever it was, I did not take that, right? And that trade's worth, 200 points, right? Or at least 130, 140 points, right? Is it ripped up, right? That's what it was. But either way, the fighting to get the short to work really put me on my back foot yesterday. Got it. That would have helped if I'd been here, right? So long story short, right? And I didn't take this one either. Well, wait, I didn't take this. I don't remember exactly how the day unfolded. I went through and looked, but at the end of the day, my got it. At the end of the day, right now, if you'll push the longs, they're just working better, and that's good, Randy. I'm glad y'all did. My point is, so here's the long story short. Shorts work very effectively for brief periods of time, anywhere from 3 days to 2 weeks, right? Where they work exceptionally well. And those 2 days to 3 weeks are really tough on the longs. You have to really have a lot of perseverance and patience for the setup to come. And it's, for many, hard to watch, the market just rip down, rip down, rip down, and go, I don't have anything. But if you kept taking your longs through that period of time, you got paid, right? Then when the market starts turning up, you really get paid. You get super paid, right? Even better. And hold on a second. And going through that, process, right? I know what I'm looking for, right? That's a very tiny description of why the longs work better than the shorts, right? And by the way, I want to point this out here at the end. If this trade had set up at 6:30 in the morning, that's the trade you don't want to let go of because it can do this rip right here, right? That was I think it's a 60 for 60, 100 points. If you can get this trade to set up at 5:30, 6:30 my time, even 7 o'clock, it can really, really rip in one direction, right? So, and again, you'll find the guys who are trying on these shorts, although no one in this room would have taken this, right? But there's the highest apex, just traps back in by a tick, right? And again, insta stop. So that little tiny edge, the more people I can get to surrender on the short side or reduce trade size. And my other saving grace yesterday, the reason I was able to have a good day was because my shorts were consistently, on initiation at least, half size, right? Half size, and then add on the back push, right? That's the other part. So things to consider, right? And then the other part, and I heard from several people on this, right? I heard from several people on this, but one person in particular was talking about, I know the process. I'm not letting the trades roll out. I'm moving my stops down too quickly, or I'm taking my profits too quickly, right? So what that tells you is one of two things if you're doing that. Number one, you're not buying in. You just haven't bought in yet, right? It just takes time. You haven't bought in, right? You haven't gone through and done the count on what the win rate is. Secondly, for that person, the longs are easier than shorts. Switch to longs, especially if you're having a hard time with when you get stopped, right? If you're a person that has a hard time when you get stopped, trade long because the number of short stops is dramatically higher than the number of long stops on process, right? By zero point 0.5 means roughly for every one stop you get right another 1.5 stops, right, or more depending on the season, right, and on the short side. So some of y'all are not going to like me for that because it means you can't be active. The other thing is if you're moving those stops around and you're hold on a sec. Sorry, I thought I heard. Never mind, it's nothing. That's so weird. So, so my point behind that, my very strong point behind that is you're not bought in and you haven't looked if you're doing those things, right? Even though you see the numbers, there's something interfering. And that's good news. The whole point of having this process, right? For example, if I took this long and said, boom, I got it, and everyone else came back and said, but Simon, you said 740, right? You said 740 is not a good time to trade, right? Well, that would be a viable call out. But why is that a viable call out? Well, the whole point of this is any of y'all should be able to understand why I took a trade, right? Everyone should know that even though this was not my highest odds trade, if I took this, at least I can make the justification that I took it in the right place, right? If I took this would be hard to justify, right? Because that's nothing. There's not a trap. It's just nothing there, right? So if I came and said, hey, I took a stop here and just guessed here that this trap back into the star and I'm taking B grade trades, I'm not setting a very good example, right? But if I took this right here, this stopped out by a tick, right? This stopped out by a tick. You can go, oh, that made sense, right? This over here is POC over POC. Once we got up here, we got above both points of control of the wave to the low, and we closed above the wave to the low on top of that. So if I took this here and it was, let's say that was 9 a.m. instead of 7:40, everyone would have gone, okay, that makes sense, right? Here's the other part. If you're moving trades around, right, the whole point of having a specific process with a significant edge, right, is that I can point to it all day long, and then we can really quickly weed out your weak points from your strong points. It leaves you exposed. Some people won't like that, right? It'll leave you exposed to your process because there's not much left to say after you go, well, this is, so let's take an example, right? I get this. I know that it can lift. And then I go, well, I didn't think it would break the high, so I shorted right here, right? So that doesn't make any damn sense if I say that. Does that make sense? So if you're my coach, right, and you go, well, how'd you lose money? And I go, oh, I thought, we would end up with a 3-bar combo here, and it would trap back in off this bar, so I shorted here, and I lost 10 points, or I lost 20 points, or whatever I lost, right? Anyone in the room could go, but there's nothing there, Simon, right? Even at least here I could go, oh, well, it looked like it had an apex trap back in all the way over here to the left. And you go, okay, well, what we would say there is it's really far to the left. And if that stop bothers you, it's best to have the apexes in relatively in the same neighborhood, right? That's the easiest way with the most immediate reward and the easiest way to not have to have lack of clarity within the discussion process, right? So all of that being said, when you have a day where you go, hey, I moved my stops, I took my trades out too early, I entered trades where I wasn't supposed to enter, well, it becomes black and white, right? And once it becomes black and white, right? You're just going to go, oh, wow. Well, I need to, you know, change my perspective, right? Because now you can't say, oh, it's this or oh, it's that anymore. It's over with, right? So, at any rate, that's my 2 cents. I could have traded better yesterday. Um, I've got to work on. First thing on my list today is just not to take any shorts, right? I've got to break myself of that and become more selective of how and where I'm going to take them. The only exception to that is wave over the wave up, wave down, POC, and star trade. I will take that, but I'm not taking any apex trap shorts. And the reason I'm doing that is because I've got to break myself of this. The problem here is I don't know if we run into the end of the year or not, right? Or we get a Santa Claus rally or any of that other stuff, right? And what I don't want to do is hamstring that process all the way through where I'm having to constantly scramble for the next 3 months and have my longs pay for my shorts. I don't want that, right? I just don't want that. So, anyways, that's my 2 cents about that. If anyone has any questions, let me know, and we'll just go from there, right? It becomes really obvious. I can just tell you, I see it a lot when people come in the room. Obviously not everyone stays who tries it out. But once you start hammering on people on you're not taking the process, you're not following the process, and that's why you're losing money, and that you will find out very quickly whether they are in this to make money or they're in this to do what they want. And it is very, very difficult for a lot of people not to do what they want, myself included. Right? I really get it. I don't criticize them for it, but it's really difficult. Right? You want to think you're a smart guy or smart gal, and we're just not smart. The problem is everyone we're playing against is smart too. Right? I want to say it again. The problem is everyone we're playing against is smart. The only thing I have to say about today, when I was looking on the calendar, there's a Fed speaker. Waller is speaking at 12:55, and I thought we were in a blackout period. So if I know that, I don't understand that. And consumer confidence is at 9 a.m., and that's moved the market quite a bit the last couple of times we've had that. So, anyone have any questions? Was that helpful? This is the time because I'm about as relaxed as it gets. Hmm. Got it, but they won't make any comment on policy. Okay. Thanks, Daniel. Let me black this out. Apex trap there. So we want to watch that we consolidate after 9 o'clock if we're staying above that 11,520 on NQ. This is one thing we want to watch for, and also the inability to get back to the prior days POC, which is in my eyes bullish. I don't know if that's mind over market or not, but it's been 2 days now. We couldn't revisit the POC and NQ overnight. To me, that's pretty bullish. We'll see. No, it has to be off the bottom or at the apex. It has to be the first bar, Joshua. Oh, wait, that? Sorry, I didn't see the picture that joined it. Yes. Yes, that is. Sorry. The green dot and the white square and the green squares. Wait back just a second, guys. Wow, they smoked those guys right out of the gate. Okay, we can work on it, Joshua. We're cool.